This is week 15 of investing every week in the stock market. I started this series to document my journey in the stock market and in the hopes some people might get motivated to start investing as well or stay consistent with their investment journey. If you're interested, do not forget to subscribe because every subscriber matters and helps get this video to the right people. This week we have around $150 to invest plus some money left over from dividends that I received in my other accounts for a grand total of nearly $200. My first buy as always is going to be in the S&P 500 through this ETF called USSL, a global X product that has leverage. The S&P 500 is an index that tracks the 500 biggest companies in the United States of America. It includes technology, financials, healthcare, consumer defensive. Literally anything that you can think of is included in the S&P 500. Historically, this has returned 10% on average for the last 40 years and does look to be a solid holding for the future as well. This ETF is 25% leverage. That means that whatever the returns the S&P 500 has, I'm going to get 25% more. As an example, if the S&P 500 goes up by 10%, this ETF USSL is going to go up by 12.5%. The opposite is also true though. If the S&P 500 goes down by 10%, this ETF USSL is going to go down by 12.5% plus the cost of leverage or interest that the ETF provider has to pay. So you can see the pros and cons here, but I like the S&P 500 as a holding for the long run, which is why I choose to invest in USSL with slight leverage, since I do believe it's going to add on to my returns. So one share of USSL, cue the order, and done. My next buy is going to be in the NASDAQ 100 through this ETF QQQL. This is also a global X product with leverage, tracking the NASDAQ 100. The NASDAQ 100, much like the S&P 500, holds 100 of the biggest companies in the United States of America. The only caveat is that these companies are mostly tech companies. The biggest companies in the world happen to be tech companies. If you think that tech is not going to add value in the future, this might not be the ETF for you. But I think tech has tremendous value potential for the future as well. If you look at any industry, for example, AI, data, automation, robotics, anything that's possibly going to transform how we live as people and as a society has technological elements embedded in it. And that is why I invest in the NASDAQ 100. Leverage, once again, like with USSL, adds on to the returns. Since I believe the NASDAQ 100 is going to have positive returns in the future, I believe leverage is going to add massively to my growth potential. By the way, this is not crazy leverage like 2x or 3x. This is just 25%. A nice bonus to keep on holding on the stock, which is why I'm going to buy one share of QQQL, cue the order, and done. My next buy is going to be in a leverage all equity ETF through this ETF called HEQL. We've covered leverage before. What does all equity mean? All equity basically means that this ETF, HEQL, holds not just the US and Canadian markets, it also holds international markets. Something you might have noticed with my portfolio is that I love America, and rightfully so, and I love Canada, rightfully so, but I also want to partake in developing markets and other booming economies. HEQL gives me an opportunity to do that. It holds America and Canada, but a percentage of the ETF is invested in international markets at around 35%. This ensures that even though I don't put a lot of money in international markets, I do partake in them somehow. And I'm more comfortable doing that because leverage might recover some of those lost gains that I don't get from not investing in the US market. So one share of HEQL, cue the order, and done. My next buy is going to be in the Canadian market through this ETF called VDY. This is a Vanguard product that tracks the FTSE Canadian High Dividend Yield Index, or the TSX 60 pretty much. The TSX 60 is the Canadian version of the S&P 500. It holds all the oligopolies that I love and adore in the financial sector, the telecom sector, the energy sector, you name it. These oligopolies have existed in Canada for decades and will continue to exist for decades, which is why I love partaking in investments that hold these companies. The price performance is not bad at around 19%, but the main purpose of holding onto the stock is the dividend yield. The dividend yield is around 4.2 to 4.5%, depending on the price of the stock, and a nice bonus for holding onto the Canadian market. Living in Canada, I want Canada to do well, and this is my way of partaking in the Canadian economy, apart from the taxes that I unfortunately have to give. So one share of VDY, cue the order, and done. My next buy is going to be in HYLD. This is a Hamilton ETFs product tracking the United States stock market or the S&P 500. This is also a covered call ETF. Covered calls are controversial online. People either love them or hate them, but I have a neutral stance towards them. They sacrifice long-term potential growth to give you income now. Growth investors don't like this, dividend investors love it. I think it's okay to invest a part of your portfolio in covered call ETFs to stay consistent and stay motivated to invest. I put money weekly into the stock market, and a main motivating factor for that is seeing my dividend income grow up as well. This ETF HYLD has a dividend yield of 12%, which is 12 times the yield of the S&P 500, which has a yield of 1%. As you'll notice, most of my money still goes into the S&P 500, still goes into the Nasdaq 100. This is just a complement to that, to motivate me to invest, to motivate my mind to stay consistent and my body to keep on working when it sees my dividend income go up. Why I like HYLD also is because it doesn't sacrifice all long-term potential growth. It writes calls on only 50% of the portfolio, which means that 50% of whatever I invest in HYLD will still partake in that nice growth. And as you'll see, it is up 10.73% over the last year. Adding on that 12% dividend yield gives me a total return of 22.7%, nearly 23%. Not bad. So I'm gonna buy one share of HYLD, cue the order, and done. That's it. Those were my investments for this week. Let me know what you bought. I'm always interested in partaking in investments that give me nice gains. And if you enjoyed the video, want to follow along and see if I make money or lose it all, once again, smash the subscribe button and the like button. It all matters and it all helps get this video to the right people. And specifically, it matters for the YouTube algorithm. I'll see you next week.